Hello traders, welcome to the LFB and our global video charting review for Thursday, the 5th of May 2011. My name's Mark O'Haig from the LFB Trade Desk. Hope I find you well. We ask you to pause the video, read the disclaimer before taking any information from the video. Just going to take a look at the three global equity markets, and we'll take a quick look at oil after that as well. This is the Japanese Nikkei. It's going to be a very disjointed looking chart. Not only do the Japanese markets close for lunch, literally, you've got a morning session and an afternoon session, which tends to create a lot of gaps. We've had a 4-day holiday, bank holiday, in the Japanese markets that is only just now playing catch up. We are into a long trend, but we're starting to get negative price action on the Japanese yen, on the Japanese Nikkei, and that's going to impact the outlook and review when these economic releases come out during the Asian session. And we're going to probably start to get, over the course of the next couple of months, a lot more sustainable price action one way or the other out of both the Japanese Nikkei and the Japanese yen than we've had for a little while. The 24-hour flow of equity movement is linked by the European markets. Europe is trading when Asia and the US overlaps, and London is the only market that actually covers virtually every global market at some point in time during the course of the day. So the German DAX is incredibly important. Now, ahead of the European Central Bank interest rate decision, which is coming out at 7:45 this morning, and ahead of the Bank of England interest rate decision at 7 o'clock, we've got very weak equity outlooks from the European markets. Now, we've had the peripheral headlines that the Eurozone has got banking problems and debt problems, but the euro dollar value has been following the bullion markets as much as it has the economic outlook headlines. That's been okay all of the time that these equity prices have been able to float higher with quantitative easing or earnings related moves. But when reality hits, if you float higher on low volume, you suddenly get a reality hit. You get a lot of volume building up on the way down. So we've got a very negative kind of outlook at this point in time on European equity markets, and we've got an overall very cautious stance on global equity markets going into the month of May. S&P futures have already signalled short. We got signal out from the break of 1350, which came on the 3rd of May. That's already hit the two downside targets. The German DAX as well, that signal has hit the downside targets and paid out as well. So clients have had recent updates and targets and signals to get short. Now's the time. We've just got to wait for this consolidation ahead of the non-farm payroll, which is coming on Friday. Just got to wait for this consolidation to take place because we haven't as yet got another clear signal. But there is definitely a negative stance to S&P trade. This is the S&P futures contract. We're looking at downside targets at 1330 and then 1320 if momentum does start to build to the south side. If that does happen, then we're going to get some moves out of the dollar index. It has been abundantly clear when you look at the dollar index chart, 1, 2, 3, 4, 5, 6, 7 days. When we think about this, big movement out of bullion markets, big movement out of gold markets, big movement out of equity markets. When equity markets go down, there's in general a move into bonds, relative safety of bonds, and the largest bond market is the US dollar-based treasury market. So when equities go down, sell equities, which we're seeing, historically you'd go to US bonds, which means you've got to buy the dollar to go to treasuries. When oil and gold and commodity prices drop, which they have done heavily, they're all priced in US dollars. So to close out a long oil, gold or silver position, in general, you're going to get paid in dollars, which is a long dollar move. But the dollar index is not moving. And the reason is Euro stuck in this range. Euro hasn't been able to make real strong appreciation. But the index that makes up the dollar has got 10% weighting towards the Japanese yen. And the Japanese yen is taking the US dollars to the cleaner at the moment. Swiss franc has got a 5% weighting, and it's just as well it's only 5% because the Swiss franc is smashing the dollar to pieces. Both the Japanese yen and the Swiss franc are getting bought heavily against the outlook for the US dollar. The 60% weighting that's made up of the dollar index in euro dollar's not moving too far at this point in time, stuck in a range. Pound makes up 10%, and pound is showing a little bit of weakness against the dollar, but nothing really sustainable. And then we've got the Swedish krona that makes up 5%, and the same as the Swiss franc is getting bought against the dollar. So we've got a real mix on dollar index outlooks at this point in time, abundantly clear that the global central banking community and the interbank market has got no desire at all to be long dollars out of economic growth prospects, but the long dollar move because of a generic move out of bullion is now obviously going to cash. That's a very negative outlook for the dollar. It's obvious that the market cannot get the dollar down below this 72.50 support area, which is probably in part to do with the central bankers holding their regional value currencies at this level. A weaker dollar is only good for one economy, and at this point in time, it's the US economy funding problems that needs to hold this dollar lower. A weaker dollar is creating inflationary pressures in overseas central banking forex valuations. And there's a look at oil. We're tumbling on oil. We've got downside targets now that we've broken the 20-day simple moving average, which was here at 110.80. We've got the 50-day moving average, which is at 106.90. That's your next downside target on West Texas Intermediate. Very choppy signals. We have 4 or 5 signals all in a row that negated this recent drop. There was no reason to think that we weren't going to get a bounce off the 20-day moving average, which we did on the 29th of April. But sentiment did break late in the US session yesterday on Wednesday, and now we're just looking for the markets just to unwind value on oil, maybe get it down to this 106.90 area, and then we'll take a good look at what the potential is for a new oil trade. If you do like the look of what we do on the video, you can get it firsthand. You can get all of this directly from the LFB website. If you are an equity trader, commodity trader, a bullion trader, a combination of all of the above, a forex trader, we'll support you from a forex perspective 24 hours a day with alerts, trade plans and signals. If you trade a 9 to 5 market, bullion or equities or bonds, and you want a little bit of foreign exchange exposure, we will support you with the markets that you trade. We do signals on gold, oil, silver, ETFs, 5 of the main exchange traded funds, and also the S&P, the German DAX, and the Japanese Nikkei. We provide all of that for you. If you go to the LFB website under the services menu, you can pick up the subscription model, and we offer some fantastic promotional deals to get you in to give us a try. No long-term contracts. The things roll month to month. If you don't like it, you don't renew. But I'm sure once you have given us a try, you'll see why we've become very, very popular for those traders that are looking to get a little bit more exposure to a market that really is coming into its own.